Okay, so what I'd like to do today is introduce the security analysis project to you all. As you can see here, RPM International Inc. is going to be the company that we're analyzing this semester. Anybody hear of RPM Inc.? RPM International Inc. Yeah. Local company. $10 billion company. As a recent. All right, so I chose. I try to pick companies that are more mid-market, mid-cap type companies. This one's a little bigger. Sherwin-Williams, of course, is even bigger. Yeah, we did Sherwin-Williams last semester. Or around the last summer, I think it was. But this is also kind of you can think of them as somewhat in that same market as a competition with Sherwin-Williams. So they do paint, they do coatings, they do caulks. You've probably heard of a number of their products, probably even used their products. Generally, one line of business, so that's another criteria I use. They pay a dividend. It's not huge, but they do pay a dividend, so we can use the dividend discount model as part of our valuation models. And it's a local company. Who knows? Maybe some of you will actually end up working for them. They're headquartered here in the Cleveland area, and so that was kind of what came into my picking choices in terms of picking this company. So RPM is the ticker. Now, as far and this is going to be up on Canvas with some examples and so forth, and some additional details. But this is the primary document that you should go to if you have doubts about what is it that I need to do for this assignment. All right. The end result is going to be a written document that you turn in, and as well as a in-class debate on the last day of class. So the written document has to have at least a title page, table of contents, and executive summary, which is what you see down here, an example of the executive summary over here. This is usually the front page of every security analysis that you want to pick up. By the way, I have at least one example on Canvas of a real security analysis done by a professional. And then all the other written material and data. Now, obviously, I don't need you to print this out. I want to hand it in electronically. I am not going to accept Google Docs. I've run into way too many problems with Google Docs. So please use Word and Excel. And you'll turn in a single Word doc. It can have links to the articles, to the material that you've gathered. That's fine. I don't need all of that, but you do have a fair amount of written work that you as a team are going to produce as well, and I'll talk more about that. So the written document is to be turned in the day before we have the in-class debate, and that is the last class of the semester. The in-class debate is basically all of the teams defending the recommendation for RPM International. All right, so a couple of key dates here. First one is coming up November 1st. Well, obviously, first thing to do is to make sure you've got your team, and I'll have that set up on Canvas for you, so you can just put your names. You can select to a particular team. Once you've got that team put together, the first job is to go out and gather some data and begin the analysis. All right, now I'll show you the detail on this. I've color-coded everything for you too. The next due date is November 22nd. That's probably the biggest bit of work is going to take place between the 1st and the 22nd. You're going to be doing your pro forma financial statements, estimating your growth rates, and coming up with valuations. So that's kind of the real core of this whole assignment is taking place between the 1st and the 22nd. And then from the 22nd to the 7th, you have time to kind of put your thoughts together, let all of that information, let those valuations, all the information you've read about the company gel a bit. I'm a big believer in having a bit of downtime to let you think through this whole thing, because I like to compare this to putting together a jigsaw puzzle, if you will. Where, an analyst is going to be doing the 5,000 piece puzzle. We're just doing the 100-piece puzzle, but it's still a difficult puzzle because it's let's say it's a round puzzle and it's a polar bear in a blizzard. So you don't have, you're looking at these shapes, there's just white pieces. All you can do is say, well, is this shape fit against that one? And you've got another 99 pieces to look at, compare. So it's tough to put this puzzle together. So I think that it's always valuable to give yourself, expose yourself to the information, the data, and then walk away from it. Let your brain kind of subconsciously work on it, which it will, and then come back to it and go, okay, let me rethink it. So that bit of downtime is between the 22nd and the 7th. You'll also have to be doing some writing. You're going to be writing about the value drivers, the investment catalysts, some of the critical assumptions, pros and cons of owning the stock, things of that nature. And then December 8th is the last day of class, and that's when we'll have the class debate. So that's the 50,000 foot view. Questions?
Do we need to sign up for the Bloomberg market concepts in order to be able to do this?
You do not. Nope.
So that's something
You
completely
do
separate.
need to sign up and have a Bloomberg account, Bloomberg terminal account. Yes.
Okay.
Yeah, but you do not have to, the BMC, you don't have to, this is not related to the BMC. Now, I strongly recommend that you do the BMC as soon as you can. But I still have not heard back from my contacts, so I have a process that I can guarantee you will work. If anybody wants to go downstairs, we can bring your laptop and I can help you get signed up for the BMC. And it will work, but not related necessarily. Other question, there was another question. All right, so on to the details here. So this is the first deliverable, and this would be November 1, right? So you need to obtain 5 years of financial data in electronic form. I really strongly, in fact, I should just make it a requirement, but I strongly suggest you use the Bloomberg data. Download it from Bloomberg. Again, having done the BMC will help you to understand how to do that. If you can't figure it out, Google it. It's not too tricky to download it, and it is so much more convenient. Yes.
So earlier, actually, I was like playing around with the terminal and just trying to get situated with that. And when I downloaded an Excel sheet of like all the financial statements for just some random company, this like error code came up. It said like £.
Yeah, what it's doing is it's you're actually ending up downloading the formulas.
Okay.
I don't know if you all are familiar with DDE. It's a protocol, dynamic data exchange. It's the protocol that Excel uses to exchange data with outside sources. And so Bloomberg is connected to that spreadsheet through that DDE connection, and there are formulas embedded in there. And if the connection is broken, then the formulas read error. So you can, however, download just the values. Okay, sweet. Think about it as just like when you're doing a copy and paste. If you're copying formulas and you want to just paste values into something else, you've got to do special paste, values only. It's that sort of exercise, but you can do both.
That makes sense. Actually, no. Okay, thank you.
Sure. So get your financial data, and I've got a link here later, right here. I did a kind of a little workshop on how to set up the pro forma financial statement that I strongly recommend whichever team member, preferably all three team members, look at this, but certainly the person putting together the spreadsheet. The pro forma financial statement it's going to be necessary for you to get full credit for that you make the financials set up such that I can go in there and change the growth rate. Your entire 5 years worth of income statements will update. And here's the real trick. The balance sheet will update and it will balance no matter what growth rate I put in. That can be a little tricky in terms of formulas. You got to link these things together. And don't forget, of course, on the income statement, when you close out your income statement, retained earnings transfers to the balance sheet. And you have to make some assumptions about the leverage of the company. Are we going to fund this external funds required using debt or equity or combination of the two? These are all decisions that you have to make as you're developing this pro forma financial statement. And remember, your guiding principle is I want those statements to be the most accurate reflection of what I think the company is going to look like over the next 5 years. Did you have a question? All right, so take a look at that little workshop I have recorded there for you. Okay, you got to get a 10K and a 10Q. Anything else that you think is relevant too, by the way. Sources, you can go to the company website. They usually have the really pretty 10K on there with the pictures and all of that formatting, or you can go to Edgar and you can get the raw data. Either place is fine. And again, here, I don't need the 10K, whatever 30 pages worth of it. I need the link. All right. So when you're putting together this information, you'll have 1 or 2 pages that are just simply, here are all the links. Separate them. Here are the financials. Here are the business media information I found. Here's the some of the key statistics that I found, but they can all be links. Now, for you all, make sure you read those things though. Get that 10K, and in particular, read the management discussion. That is really key. Got to read the management discussion. You really should be reading all the footnotes too. Where did Enron hide all of its debt? Footnotes. The analyst that caught that has been lauded. So make sure you read all of this stuff. But for me, for the turn-in, for the deliverable, all you need are the links. Industry-related data. So here's another thing that you'll need to do at this point. You're going to have to figure out what is the industry? What are my comparables? I want you, I think I have, what they say, 4, I think. I don't think it's here, it's later on. I believe I've asked for a minimum of 4 companies that are the best comparables for RPM International. Now, many sources, you can use the SIC code, 3-digit, 4-digit matches, but those are self-reported. Those could be, wrong. You could use what Bloomberg says are the industry comparables. And there again, Bloomberg is going to, they'll use some discretion in terms of which ones they pick, but it may be different from you. And remember, you are the analyst here. That's the value added that you bring to the table is what are the true comparables? I like to use the analogy of the housing market. If I'm doing a drive-by valuation of a house and I look up, 3 comps that are within a quarter mile, within 10% of the square footage and have most of the other characteristics of my subject house, and I do a drive-by on those, or I don't even bother to do a drive-by, I just look at some photos. That's not going to be a very good comp. How do I know that? because I've actually, when I sold my house in El Paso and when I sold other houses, I hung out at open houses for like the year prior to that and looked around. So I really knew what these comps looked like. I'm going, that comp is a decent one. This comp is entirely inappropriate. The house is falling apart. You may not see it in the photos. If you do drive by, it may not look like the house is falling apart, but it's falling apart. So dig in there and you guys and gals pick the comps that you think are appropriate. Obviously, we're going to look for something that has coatings, but it doesn't necessarily have to be a direct competition in that market if you think there's something else that's reasonable. Let's see here. So that's you got to get your comps and then get your industry related data from those comps. And again, Bloomberg is a great resource there. You can get the ratios, right? If you go to the FA function, financial analysis function in Bloomberg, you can grab those ratios easily for all of your comps. So if you have more than 4, that's easy to do. You don't have to calculate all of the ratios on your own. They're already in the Bloomberg terminal. In fact, let's see if we can get it in the now. We'll try that later if we have time at the end. Obtain the industry outlook. So I need some sort of forecast of the industry. Now, if I were doing this for real, if I were in the business of doing security analyses, I would probably come up with my own industry forecast because I work in that industry and I cover these 7 or 8 or 10 firms in that industry. For you all, you're not in that industry. You don't know necessarily what's going on. Thank goodness Bloomberg has an easy resource and you can get the industry forecast from Bloomberg. You can also get the economic forecast from Bloomberg. So industry forecast is focused in on the industry that RPM International is in. Economic forecast is the overall economy in the US. So you get both of those things from Bloomberg. Any other data that you think is relevant? So I really strongly recommend certainly use the current news feature in Bloomberg to look up news about RPM International and look up news about the industry. Go outside of that too. Go into popular press, do some Google searches, try to track down that one key thing. I forget whether I've given you this example in the past. Forgive me if this is a repetition, but it's also relevant at this point in time too, and may ring more true. There was an analyst back prior to the year 2000 changeover, right? The Y2K, and Y2K was a problem because early on computer memory was very, very expensive. And so as a result, instead of coding in a 4-digit year, people were coding in 2-digit years back in the 50s, 60s, 70s, saying that it's 30, 40, 50 years away, don't have to worry about the other 2 digits. So instead of coding in, 1963, they would code in 63. Well, around about Y2K, all of a sudden, this was going to create havoc. And so companies were pouring through all of their code, trying to find those problems and turn them into 4-digit years. This was much more difficult than it might sound. As a result, they were also spending tons of money with tech companies getting help. In particular, this was IBM that this gentleman was following. And everybody was giving IBM huge buy ratings because, oh boy, IBM's business is just going through the roof. This one sole analyst went, something's fishy here. So he started calling around to the companies who were customers of IBM, and he said, how much money do you expect to spend in the year 2000 after we get over this? Presumably we're all still here, the Earth hasn't ended. And so how much are you spending in 2000 and 2001? And the answer was nothing, because we blew our budget in 98 and 99 trying to fix this problem. And he kept getting that answer over and over and over and over again. He said, oh, wait a minute, this isn't a buy rating, this is a sell rating, because their earnings are going to plummet after we get past this year 2000 change. Turned out he was right. He looked further. So my point back to this, dig into the information, find something that nobody else has seen. You're always at risk with that, but dig in there and see what's really going on. See if you can find that one key piece of information that everybody else has missed. That's really going to bring value to your recommendations. Of course, this MLS got written up in the Wall Street Journal, and story had a happy ending for him. Of course, had he been wrong, he would have been fired promptly and never heard from again. He would have been eliminated. Watching Squid Games. Okay, I talked about the comparable firms already. Yes, there's the minimum of 4. You need to come up with 4 that you believe are comparables. You're going to use those 4. First off, I need something about why did you pick them? Then gather the data that you're going to need to create the graphs that we're going to see here in just a minute, and do some of the Dupont analysis, that sort of thing. But I want to know, why did you pick these 4 in particular, or 5 or 6 or whatever you choose to do, but at least 4. Then you're going to use those 4 as a baseline, right? Compare RPM International against those 4 individually and as a group. The first way you're going to do that is by creating these 5-year graphs that plot ratios. Right. By the way, there's this additional notes handout that is on Canvas, and that categorizes the ratios into 5 broad categories. You've got the profitability, you've got leverage, you've got coverage, you've got efficiency, and what is the last category? Drawing a blank, sorry. But go to this additional notes handout, and it outlines those ratios. Now, again, I know that you all have learned to calculate the ratios, and ideally that's how we would do it, but we also have a Bloomberg chart. And if you go into the financial analysis function, FA, you will find on one of the secondary tabs, you will find ratios. Click on that tab, you're going to get 95% of the ratios you need. The PEs, the PE, the price to cash flow, that sort of stuff is under a different tab. It's called multiples. But FA, remember that function, FA, that is going to be your friend. Learn that function, learn what's available in there. It will serve you well. So you're going to create these graphs. So they're going to span historically 5 years back, and you're going to be plotting RPM International's ratio. Let's say we're doing ROE. Plotting ROE for RPM International, and then we're plotting the average of your 4 comparables. Why are we doing this? To see how RPM is doing relative to this baseline that you've set. Are they above it? Are they below it? Are they about right where they should be? Has something gone strange in a particular year, especially a current year? Has ROE dropped off? Has it gone up? Why? These graphs just provide you with a little bit of evidence. So again, kind of an analogy here. Think of yourselves as investigators. You're trying to figure out what makes RPM tick. And these graphs are some evidence that you'll use to figure out what is it that's making this company go? And how is it doing relative to its peers, to its comparables? The other thing to be careful about in creating these graphs, don't just blindly grab ratios, average them, and plot them, because sometimes companies get really bizarre ratios for who knows what reason. You see something strange, dig into it. Figure out why one of your comps had a negative ROE or whatever. Whatever the strange number is, it might cause your average to be biased one way or the other. We don't want that. Don't just throw things away. Try to figure out what's going on. We garbage in, garbage out, right? We want quality data coming in to give us the sufficient data coming out of this graph so that we can figure out what's good and what isn't so good about RPM International. So you got those. Next thing is to do the Dupont analysis, ROE decomposition, otherwise known as. And there we're taking ROE and decomposing it into at least 3 elements. You could do 4 or 5. There are various ways of decomposing ROE, but the whole idea is we're going to decompose it into, at the minimum, a profit margin, an efficiency measure, and a leverage measure. Right? And again, we're going to compare ROE, the ROE decomposition in all 3 of these elements of RPM International with your comparables, with your peer group. And we're going to say, okay, well, let's see. RPM International seems to have a better ROE than our peer group. What's driving it? Do they have a better profit margin? Are they more efficient in utilizing their assets? Or are they simply using more leverage? And then you need to figure out whichever of those 3 turns out to be the case, or maybe 2 of them turn out to be driving it. Figure out, is that sustainable? Is that something that, you know, I see only lasting for a couple of years? Maybe their ROE is entirely driven for the last 2 years on a really high profit margin. Well, they just came out with a new product, and that new product is going to be duplicated by their competitors in the very near future. And so that ROE that was high is probably going to go back down in the future. That just as an example, right? That's the kind of thing you're looking for. What drives ROE? So you can think of this first thing, the graphs. You're obviously going to have ROE in there, but this is like a very deep dive into that ROE to figure out what it is in particular about ROE. Here's more info about the plots. And then one final thing in this deliverable is to calculate the coefficient of variation on sales and operating profit. Coefficient of variation, what are we going to get out of that? Well, it's a very, very rough measure, but I still think it's worth doing. So what we're trying to discern here, we're looking at 2 items off of the income statement. We're looking at the very top line, and we're going down a little bit. What we're trying to figure out is how much operating leverage is embedded in the cost structure. Operating leverage. Can somebody give me a definition? You've heard of financial leverage, and I know you've heard of operating leverage, but can you define it?
I know it does have to do with free cash flow. Am I thinking something else?
No, not free cash flow. What might cause volatility in our profitability, in our net income? Well, clearly leverage. What is financial leverage? Financial leverage is using debt to buy some of our assets instead of just all equity. And by using that debt, what have I done? I've obligated myself to pay interest on that debt. And I can't get out of that, or else I go into default. So no matter what sales are, I've got this interest obligation, and it's pretty well fixed, at least in the short to medium term. Operating leverage is the same idea as it relates to cost. And here we're talking about fixed versus variable cost. If I have a very high component of fixed cost, in other words, my costs, regardless of whether I produce 1,000 widgets or 2,000 widgets, I've got, 80% of that is fixed cost because I've got this huge factory and a lot of plant property and equipment. It just ain't going away. So if my revenue drops, my sales drop off, all of a sudden I immediately go into loss territory. Just a little drop in sales causes my operating profit to plummet. So I might drop sales by 5%, but my operating profit goes from positive to negative. Or if I have a relatively low fixed cost component, my operating profits will kind of mirror my revenues because by having low fixed cost component, I have a high variable cost component. Meaning that as sales decrease, my variable costs decrease. So now these things kind of move together, as opposed to high fixed costs where revenue, I've got profit here, revenue drops and profit just falls off a cliff. Revenue comes back up and profit comes back up. So the idea of this coefficient of variation, I have a very high coefficient of variation on operating profits over a similar period where I have a relatively low coefficient of variation on revenues, then I probably have operating leverage to be concerned about. Again, it's a very rough measure, but that's the last item. So you've got operating leverage you're going to get into. You're going to plot these ratios. You're going to do a Dupont analysis or ROE decomposition. You're going to select your comparables. You're going to gather together all of your data, both financials as well as media. And that's deliverable 1 due November 1. Questions? It's not a lot of work, especially with a team of 3. You can split it up. Make sure you share those links so everybody's reading as you bring things in. But you'll find that using the Bloomberg terminal will be your friend. You don't have to calculate all those ratios by hand. They're all going to be done the same way for all of your companies if you pull them from Bloomberg. Generally speaking, you can probably get that from Zacks or Yahoo Finance or any other resource that provides financial data, but we've got a terminal, we may as well use it. And I think their data is much more transparent as to what they're doing. You can drill down and figure it out. Yahoo Finance, not so much. I haven't been able to find how do I actually get this ratio? How do I duplicate this? So anyway, no questions on that? All right. What are we doing time-wise?
You said this will be posted on Canvas.
Yes.
Thank you.
Yep. Along with some supplemental information to help you do that. Now that I can show you. No, I don't want to do that. Let's go away. Eventually, we're going to have like 50-digit passwords. Right. All right, gotta do it. Uh-oh, come on back here. comes a time when IT runs the institution. And we're subservient to anyone in IT that's. Maybe. There you go. We're in. Okay. So what I haven't published this because I haven't uploaded the new assignment, but you will see here a tab that says Security Analysis Project. And these are the additional security analysis notes. So these are some notes that I've taken out of other textbooks to aid you in the process. So here's a bit about economic and industry analysis. Some about qualitative issues. Believe me, one of the things that you may be a little surprised at is that while there is a lot of quantitative analysis here, a large part of this is qualitative as well. There's a lot of subjectivity. Our models get us to a certain level, and then we're going to have to use our judgment as a professional in order to come up with that final choice. And so this talks a little bit about some of those qualitative things, even to the extent of evaluating management, looking at the board of directors. Are there interlocks between the CEO and the chairman of the board? Are they the same person, in other words? Does the governance structure follow best practices? Do they have a diverse board? Things like that you want to get down to that level of detail and think about how these, not only how they help the company operate more efficiently, but what sort of things do they signal to the marketplace? ESG, right? Environmental, sustainability, governance. Think about those things as well, especially for a company like RPM International. I mean, they're dealing with a lot of chemicals. What's their impact on the environment? So those are some of the qualitative things that you should be looking at. And then here we get down to the ratios. Liquidity, that's the one I forgot. Rather important one, but so here are the ratios. Now, you're going to use Bloomberg. I just give you some examples. You don't have to use all of these, but certainly use your judgment. Here's a bit about the Dupont analysis. You can break it out into a couple of different components. Here is the version that, oops, right here. This one breaks it out into 3 ratios. And here's the bit about operating leverage. So this is the coefficient of variation. And I think that's it in that particular document. And here's an example of a analyst report. So this one is on Darden restaurants. It's getting a little dated, it's 9 years old, but the basic elements are still the same. Now, I don't expect you to end up with a report that's quite like this. Again, remember, we're doing the 100-piece puzzle. These folks are doing the 1,000 or 10,000 piece puzzle. But this should give you, we shoot for this with the idea that we know we're going to land down here because this is the first time through this. And what else here? I'll update this. So I'll actually share with you the mid-year for the whatever the most recent outlook is for the industry. In our case, I believe it's also going to be specialty chemicals. This is the one from when we were doing Sherwin-Williams. I think there will be an update to this. This is dated. See the date up here. This is dated 8/5. Yeah. Okay, 8/5. So maybe there are no other updates. I'll look and see. So I'll share that with you, but you should get familiar with Bloomberg so you can find it yourself soon.
Do we have access to Bloomberg as
You do.
like the actual like, you know,
Yep.
magazine and stuff like that?
Yeah, either down at the terminal, or you can go to bba.bloomberg.net. And the first thing you need to do is follow the instructions there, download the Citrix receiver software, install it, restart your browser. It's got to be either Safari or Chrome. And then you should be able to log in remotely as well. The only problem with that is that if there's somebody on the terminal downstairs, they have privacy. You cannot kick them off. They can kick you off though if you're remote. So be careful about that. But yes, and if you haven't created a Bloomberg account, the simplest way to do it is just go downstairs and create the account. You just use your JCU email address. I don't know, maybe we should go down there and just do like a workshop sometime after. I don't want to do it in a class period, but if we found a time outside of that, would that work? Okay. Times that might work well for that. Maybe we could even do it this week. Evenings, late afternoons. Is that? I mean, I know a number of you probably have practice, that sort of thing.
You can even record it.
I could, yeah,
Just
yeah.
if you throw it up in the data analytics lab, you put on the big screen, you could probably record on there.
It might be, well, in fact, I might even just do it at home. That may be easier to record it that way. I will need to actually follow through all the way. I'll need somebody or some of you there so that you can actually use your email addresses and walk through it. Let me see what I can figure out downstairs about doing that. I'll set up a session where at least a few of you can come in. We'll do it live and then we'll record that session. That's a good idea. I've also, oh, sorry, did you have your other hands up? I've also got another link here. This is some of Aswath Damodaran's work that will be helpful. This is about valuing a firm with negative earnings. I don't think we have a problem with RPM International, but some of the stuff that he provides is very, very, very helpful, especially if you're thinking about this as a career path as being an analyst. Don't encourage this, please. All right, questions so far? Yeah, at least that tells me we've got 5 minutes left. All right, let me go back to the pro forma. Okay, I'm just gonna, since we're down to 5 minutes, I'm just gonna fly through this. We can talk in more detail once we get past the first deliverable, because this is the second deliverable. Doing the pro forma financial statements. I already have a recorded session on YouTube that walks you through there. It's about an hour or 30 minutes-ish. So I walk you through not only the basic idea that you should already have out of 19, but this would be a refresher, but also specifics in terms of how do you write that formula? And what's an easy way to put together the spreadsheet and make sure that everything is talking to everything else. So watch that YouTube. Pricing of the stock, we're going to use multiple methods, but before we do anything, we need a growth rate. This is another very important quality or value added, I guess I should say, value added piece for you as an analyst. You can use as a starting point the historical average, either arithmetic or geometric or both, sustainable growth rates, all the stuff we've learned about in chapter 2. Is that right? So use those as a starting point, but that's just a starting point. I don't need an analyst to tell me stuff like that. I've got a computer that's generating that for me. What do you bring to the table? You bring forward-looking material and you impound that into that growth rate estimate. So what I want you to do is come up with at least 4 forward-looking items that you think are going to alter the historical growth rate. So historical is where we've been. But I want to know where we're going. Is it going up or down? Now, I'm not going to ask you to actually run it through the income statement and show me how ROE is going to be affected. That's what you will do when you're in the business. All I'm asking is that you identify the factors in your reading. So you're reading in Barron's or Fortune or Wall Street Journal or even the popular press. And you say, this is going to affect the need for paint, positively or negatively, I don't know, whatever it is. And then you say, well, gee, about how much? So I'm just looking for a ballpark estimate. It's going to decrease growth of earnings by 0.5%, or 1%, or 2%, if it's a really big factor. Also, you could look at what's the forecast for the industry. Very negative. Ooh, I expect my earnings to drop, then more than likely. Or is it very positive? Oh, I expect my earnings to go up. So you get the idea. I want these 4 forward-looking things. That's your value added. You need to calculate a K, a required rate of return. But I'm not going to just let you off the hook and you can use Yahoo or Bloomberg's or Zacks beta. That's not going to cut it. I want you to calculate your own beta. And that may sound like an easy thing, but all of a sudden you've got these problems like frequency of data. Do I use minute by minute? Do I use day by day, week by week, month, quarterly, yearly? How far back do I go? 2 years, 3 years, 5 years, 10 years? These are all things you have to decide. And it may have a significant impact on your beta estimate, which in turn affects your K. You're also going to have to figure out, well, what's my market risk premium? What's my risk-free rate? In today's world, we can't just use the T-bill rate because the T-bill rate is at a historic low. It's like almost 0. So that doesn't make any sense. We're valuing this company from here out to forever. And we're pretty sure that in the future, rates are going to go up. So these are all things that you're going to have to think about and factor into your estimates. We'll talk more about that later. 1 more minute. I think Yak can wait. The 3, sorry, I didn't update this. This should be, you can either use residual or dividend discount model. You'll do a relative valuation, and then you're going to use your pro formas to do a discounted cash flow. It's a really in-depth method. So you come up with your 3 estimates of value, do some sensitivity analysis, and that is your deliverable 2. And we'll pick this up on Friday. Thank you.